turning art into an asset empire. Once the first re-recorded album launched, the results were immediate. Massive sales, record-breaking streaming numbers, cultural dominance. But the deeper impact was financial. Because every successful re-recording didn't just generate revenue. It increased the value of the entire new catalog. Think of it like rebuilding a company's product line from the ground up, except this time the founder owns 100% of the equity. Each new release expanded the portfolio of assets she controlled. And each asset produced its own revenue streams. Streaming royalties, vinyl sales, digital downloads, merchandising opportunities, film and television licensing, advertising placements, international distribution. Individually, these income streams are powerful. Combined across a massive global fanbase, they become extraordinary. But the strategy had another hidden advantage. The re-recordings weren't just replacing old songs. They were becoming events. Each release generated enormous media attention. Fans treated them like brand new albums. The marketing cycle repeated again and again. And with every new release, the narrative strengthened. This wasn't just music. It was ownership in action. The result was something unprecedented. Instead of simply earning royalties from an aging catalog, the artist was relaunching her entire discography as a new economic engine. And that engine was fully owned. The psychology of market control. Here's something most people don't realize about modern markets. Value is rarely determined by raw numbers alone. It's determined by belief. Stocks rise when investors believe in a company's future. Brands thrive when consumers believe in their story. And intellectual property becomes powerful when people emotionally attach themselves to it. The moment the re-recording strategy was announced, something remarkable happened. The narrative shifted. The story was no longer about a catalog sale. It became a story about artists reclaiming their work. About creative ownership. About fairness. About standing up to industry power structures. And fans responded immediately. They weren't just buying music anymore. They were participating in a movement. Streaming the new recordings became a statement. Choosing the new versions became an act of loyalty. And suddenly, the market began to move exactly as the strategy predicted. Streaming numbers surged for the re-recordings. Film studios began licensing the new versions instead of the originals. Brands followed the same pattern. The entire economic ecosystem surrounding the catalog started shifting. Not because of legal force, but because of public narrative pressure. This is where the brilliance of the strategy becomes clear. The re-recordings didn't need to erase the originals entirely. They only needed to capture enough market preference to redirect the majority of revenue streams. And that is precisely what happened. Every stream, every licensing deal, every radio play choosing the new version over the old one, was essentially transferring value from one asset to another. From masters owned by someone else, to masters owned by the artist herself. This wasn't just music marketing. It was financial engineering. The spark that ignited a financial war. When news broke that the master recordings of her first 6 albums had been sold to a new owner, the situation looked straightforward. A standard music industry transaction. Labels sell catalogs all the time. Artists complain. The market moves on. But something unusual happened next. Instead of simply protesting the deal, the artist made an announcement that stunned the industry. She said she would re-record every album she didn't own. At first, many observers dismissed the idea. Why would anyone want a new version of songs they already loved? Why would fans replace the originals they had been listening to for years? From a traditional industry perspective, the strategy looked risky, even irrational. But from a contrarian business perspective, it was something else entirely. It was a financial strike. Because if fans chose the new versions instead of the originals, the economic value of the old masters would collapse. And the value of the new recordings, the ones she would fully own, would skyrocket. In other words, this wasn't just a creative project. It was an asset replacement strategy. A calculated plan to redirect billions of streams, downloads, and licensing deals away from assets owned by someone else. and toward assets owned entirely by her. The music industry had never seen anything like it. And the success of that strategy would depend on one critical factor: the most powerful force in modern economics: narrative. The hidden power behind music wealth. Let's start with a simple question. Why do some musicians become wealthy, while others become unimaginably rich? The answer has very little to do with talent, and almost everything to do with ownership. You see, the music industry operates on two very different layers. The layer most people see is performance. Concerts, albums, streams, tour. That's where the celebrities live. But the layer where the real money accumulates is something else entirely. It's the ownership layer. The copyrights, the publishing rights, the master recordings. These assets function more like financial instruments than creative works. They generate revenue streams that can last for decades. Licensing deals, streaming royalties, film placements, advertising usage. Every time a song plays somewhere in the world, someone gets paid. And if you own the master recordings, you control the majority of that revenue. Which means one catalog of successful songs can become a perpetual cash machine. This is why music catalogs are now being purchased by investment funds for billions of dollars. To them, songs aren't just art. They're yield-generating assets. And this brings us to the central conflict that triggered one of the most brilliant financial pivots in modern entertainment. Because early in her career, the artist at the center of this story did not own her masters. And that meant someone else owned the most valuable assets she had ever created. For most musicians, that's where the story ends. But not this time.
There are moments in business history when a single strategic decision reshapes an entire industry. Moments when someone refuses to play by the existing rules and instead rewrites the game. Tonight, we're breaking down one of the most fascinating financial maneuvers of the modern era, a move that transformed a public music dispute into a multi-billion-dollar empire. Most people saw a pop star reclaiming her music. But the world's elite investors, they saw something very different. They saw one of the most aggressive asset reclamation strategies ever executed in the entertainment industry. A strategy that weaponized copyright law, manipulated market perception, redirected billions of dollars in consumer demand, and ultimately helped build a fortune approaching $2 billion. This is not just a story about music. This is a story about ownership, about control, about understanding that in the modern economy, the people who win are not always the ones creating the product, but the ones owning the rights to it. And what happened here might be the most sophisticated example of narrative control and financial leverage ever pulled off by an artist. So today, we're going to break down the cold, calculated strategy behind it all. Not the headlines, not the drama, but the business mechanics behind the empire. Because once you understand what really happened here, you'll never look at intellectual property the same way again.
The private investment strategy that rocketed Taylor Swift to a $2 billion net worth.